I want to cover a trade that one of our traders in particular took today. I believe his name is Samuel. It demonstrates the power of a tactic that does represent the most powerful item that you have in your arsenal. And that item is the 180. So we're going to look at two plays, in fact, that are based off of your most powerful item, the 180. Just as a quick review, out of all the tactics or events that you play, this is the most powerful. When you have a green bar, a strong one, a strong green bar that is immediately dwarfed, taken out, and removed by an even bigger red bar. It's an immediate reversal. It's a 180. That's where my name comes from. I've named this. It's a 180-degree turn, and the turn occurs in a violent, powerful, almost major punch in the face way. It's a knockout blow to the green bar. What this bar is doing, guys, is it's neutralizing everything that the green attempted to accomplish, and then some. There's the then some right there. Boom. So if we take this bear 180, the obviously works in the opposite direction as well, a bull 180, but this is a bear 180. If we look at that, we can see that right off the open this morning in Disney, you've got the bear 180 scenario. The first bar of the morning gives you a nice, strong green bar, a green bar that moves right into its overall flat 200 period moving average. Immediately, in a violent way, there is a 180-degree turn that not only neutralizes and eliminates all the green, you get that and then some part, that part that goes a little bit further. It wipes out the green and goes a little bit further. That's your classic bear 180. Disney did it so perfectly this morning that it would be very difficult to even draw that better than Disney did it this morning. Now, the way you play this, the way you enter this, is as soon as you break through the green, it is a go. Boom! You can short the play. Dive into that red bar as soon as it passes the green. That's the official confirmation entry. As soon as it crosses the green, go. You don't have to wait for that red bar to finish. You go as soon as the red crosses the green. You're in that bar, in that red bar. As soon as it crosses the green, you're going to put your protection above the event. Now, all of you guys, everyone should have a maximum loss per trade that is part of their trading plan. You have to know what that is. I always give you guidelines about how you come up with the maximum loss per trade, but every trader must have an amount that you have that is part of your plan. I will not lose more than this amount on any given trade. This will help you determine what size do you play this in, because you know what your stop is going to be. If you're here, you have more or less a 50-cent risk from entry to stop out. You got 50 cents. If your maximum loss is $50, then you can't do more than one lot or 100 shares. If your maximum loss is $100, then you can do two lots. You can do 200 shares. You have to make sure your trade does not violate your maximum loss per trade, and this can help you determine what size. How many lots do I do? So let's say in this one you can do two lots. We're going to go in here, boom, enter two lots. We know where our stop is 1 penny above the event, okay? Now, there's something about this trade that I want you to be aware of. What we're always after is what I call a whale. We're always after this event. If we take a short there, like we take a short here, we're shorting two lots. What we're really hoping that happens is that pattern there. Instead of getting the drop, rally, drop, you can get a drop so big that it actually is long enough to be assumed to be the whale without the pullback. Now, normally what you get when you see these is you'll see how I drew this little wrinkle here? You'll get a little wrinkle, a little pause of some type, typically. And you'll get that pause often around the middle. Sometimes you'll get this sideways and then drop, but we're talking about this one where it's almost like a solid move that goes deep, but you do tend to get a little pause where the pullback would typically be. We get that here in Disney. Let me show you. Here is your entry, and the pause is very brief, but I want you to understand what this stock did. Let's go over it. Let's take this away. This hasn't happened yet, okay? I'm going to take that away. I want you to take a look very carefully. We move up. Your stock moves up from here. You actually see this green at the time. This green goes away right there. The green falls back and boom. Do you see that? Do you see that little blip upward, which you would have seen if you watched the stock while you were in the trade? It moved up. There's your wrinkle. So here is your whale. Your stock tried to give you the pullback. It tried to give you the pullback, but couldn't. Do you see that? It tried to give you that pullback, but couldn't. That's extra powerful, that it couldn't give you that much green because it's that beaten down. It's that weak. It's that destroyed. But it tried. It tried to bounce here and couldn't. And so in reality from here, tried to bounce here, but couldn't. And that's your whale complete. And the reason why this is very important to understand is because some people, some traders who don't know this concept might think like, well, now I'm getting my whale complete. No, 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 no. This is too deep. You started from here. You're not getting a whale on this side now. Your leg is too big. Remember, the pullback in a whale is assumed to be the middle, which means that you should be able to duplicate the upper portion under the pullback. Now, how are you going to duplicate this if this is the middle? That's expecting too much. Your leg, your initial leg can get so long. I want you to understand that it can start becoming a complete whale complete, especially if you see a little wrinkle in between, that little wrinkle. Now, it's not clear to you now, but when you're in this trade, you do see that color green right there. You do see that. It just disappears on you. Now, some traders might say, well, Oliver, what about the green from here? You don't really truly see this green, although you do see the move upward, whereas at this green, you really see green. Here's what I need you to understand. Here's your entry. This is too close to consider that this is the leg. It needs to be further away from your entry. There's the wrinkle. There's the wrinkle. There's separation. There's enough separation from your entry and the wrinkle. You don't want to start assuming that the wrinkle is right next to your entry. So you want this, guys. Entry, wrinkle, exit. You don't want this. Entry, wrinkle. You don't want to start assuming that your middle can be that close to your entry. All right, you need separation. Separation, not enough separation. Separation, not enough separation. All right, the power of your Bear 180. This is the most powerful event in your arsenal, guys. There is nothing else that you have that's more powerful than the 180. What makes this even more powerful is that the 180 is originating off of a flat 200. This gives it extra power. It doesn't need extra power to be powerful. This turbocharges the power of the 180. It's originating from the most powerful moving average you have. So now you have the most powerful event, the bear 180, that is originating off of the most powerful moving average, the most powerful position, flat 200 period moving average. If there was one to give everything that you had, as long as you didn't break your maximum loss per trade rule, this was the one. And there's no surprise why there was just so much flow. Powerful. Let's go to Baba. I want us to go over this bear 180 because this is a version of bear 180 that I want you to be aware of as well. It's the bear 180 that gets a head start. So what we're going to have to do with this one is I'm going to have to, let me erase this. Let's get rid of this. This hasn't happened yet. I want you to realize that this was a solid green bar off the open. And look at that bar. I'm always telling you that when you have something sizable, you can always cut it in half. And you can look at this as if it's two green bars. One is just standing on the shoulders of the other. You've got 1 and 2. What happens is, boom, you lose bar 1 right there. Now, what exactly is the color of the downward movement if you had to paint it? It would be red. So in a way, what you have is red dropping. It's just happening early. Instead of the red happening the next bar, it's getting an early head start and it's happening the same bar. Instead of the red being delayed and happening the next bar, it's just happening the same bar, getting a head start. Boom. Boom. Now that's the more advanced insight. But what's also interesting, full, complete bear 180 right there. Boom. So you get this more advanced version of an early bear 180, and you get an actual bear 180 that's classic. Power red takes out power green. Boom. There's your short. All right, more advanced short there. Regular short there. Boom. The rest is history. But let's go over how this trade would be taken. I'm going to show you the advanced one would be taken more or less here at the halfway mark of the green disappearing with a stop there. The regular bear 180 would be taken here, okay? Same stop there. The add in both cases is here under the green. First color change, add. Red takes out green. So it goes like this. If we were to do the regular one, you're going 2 lots, stop, 1 lot, add, and here's your drop, here's your rally, boom, there's your whale complete. Now remember, that's what we're going after on every trade. We're going after that pattern on every trade. And if we get in somewhere here, we're looking to take profits. All right, I'm not going to go over this today, but get back in on the pullback, take profits, and out. That's your quintessential trade. That's the quintessential trade. Here it is. Boom. I forgot to put the add there. Add. Say you took profits here. Add. So if you look, you got this scenario. Same thing. It's literally the same as this picture. Some of you should just draw this out yourself. are you doing your trade according to this pattern? I take an entry, I add on the first color change, I take a profit on some pushes, I get back in on the pullback, I take profits on the new low, and I make sure these profits are separated. I take my add, I take my entry, my first color change, profit take, get back in on the pullback, profit take 2 more times, but each one must be separated. Initial entry, first color change, profit take, get back in on the first pullback, profit take, separated. Okay, now there's some stop adjustments here, the break even and stuff like that, and then the pivot 1. But that's a different talk. If you are capturing whales when they are available to you, it's a very, very good sign that you're developing very nicely. If you can't seem to get a whale, you're not allowing, the key is you're not allowing your stock to experience the first pullback. You're scared. That's the first pullback. You have to be willing to allow the stock to move against you, typically after you've taken some off the table. You have to be willing to allow your stock to move against you after it has moved in your favor. It is this allowance that is going to set you up for grabbing the second leg. But so many traders get scared of the pullback, see, because you're losing some of your profitability. You're like, is it going to turn? Is it going to wipe out all of my gains? And you exit. Mistake. The traders that don't grab whales when they're available, if they're only a one-leg trader, if you only become a one-leg trader, you're going to have a hard time being totally, consistently successful. You've got to be a whale hunter. Oliver, what about the position? The position is not the most ideal for a short. Like the position for Disney was very, very nice. But the position for Baba is not so nice. But the bear 180 and the bull 182 is so powerful that you can relax that a little bit. It's almost like, let me just give it a shot because I'm playing the most powerful thing in my arsenal, the 180. Remember where this drop fell from, guys. This drop started from here. I want you to look at that dot right there. That's when it started falling. Instead of looking at it falling in the green bar, I want you to imagine it falling on the second one, and I want you to see how this looks. And I want you to imagine that the green didn't fall, but the fall happened the next bar, like the classic one. So I want you to take a look at this, and I want you to really see how powerful this is. This can be in any position, and it's likely going to work. That's crazy powerful. Do you see that? It just started dropping early, so it doesn't look like this, but this is what it is. It just started early. It started in the green bar. But if it started in the red bar like the Disney did, you'd see it a little bit more clearly how powerful this is. This is so powerful that you have to assume that I don't even care if there's a green attempt here. It's not climbing that wall. That red wall is too powerful. A bounce is not climbing that red wall. Oliver, which is higher probability of working? The bear 180 at the gap or the hidden gap bar continuing? I see what you're saying. You're saying that I think what you're asking is, could this have just kept going? Yeah, it could have, but it didn't. you've got to play what you get, right? What you got was a bear 180. Now that's the play. And if you were long, if any of you got trapped long here, you got to stop and reverse on your bear 180. You got to get out and reverse the play and get short. That's too powerful to let go now. And you get your money back. Every trader they have a set of stop and reverse rules. Under what scenario do you reverse a stop out? And if a bear 180 is stopping you out, that is the classic stop and reverse signal. Ah, okay. Tiago says, my mistake was not to stop and reverse due to the location. Okay, good point. Guys, again, the bear 180 is so powerful that you can relax the location a little bit. Yeah, so remember, guys, the bear 180 is the most powerful thing you have. So it's almost like you should just try it anyway. It's that powerful. If you're a little skeptical, you try it with a smaller lot size. All right, but two powerful examples here today of how the bear 180s delivered. And this open wasn't an easy open, but if you played the bear 180 plays, they were easy opens today. These trades are easy. Disney was easy. Baba was easy. I'm always reminding you, what you should do now is make 180s a big focus of yours until we meet again. Look for them, find them. Find the ones that you didn't play. Mark the trade up. Just like we marked this trade up, find a bear 180 and mark it up, guys. Play them. Keep track of the results. Let's build some experience behind this.